Morning all. Welcome to the webinar today. We're joined here by Managing Director Scott Winter, and shortly introduce special guest Patrick Greene from the energy market. He's going to talk about the battery market here in Australia. But to begin with, I'll hand you over to Scott to tell us a bit about what we've been up to lately.
Thanks, Stuart. And for those that don't know me, I'm Scott Winter, the Managing Director for Critical Minerals Group. Have been here for around 2 years. And it's been a pretty exciting year, and one that's ever changing and growing. Certainly the energy market, the transition that we are playing into and developing is changing and really moving to support what we're actually doing in a lot greater way. I'd like to talk to you about a few things today. Just a little refresher on the strategy that the business implemented. That'll be the first section. Then give you a little highlight about what we've been up to in the last quarter. You would have seen our recent quarterly come out, so you can get that online and see what we've been doing and where our focus has been. Then, as Stuart mentioned, we have a special guest, Patrick Greene from the Energy Project, who is an industry expert, has worked in the space for a long time and can give you a perspective on. There he is, popped his face down the bottom there. A perspective on the market, policy change, and where his perspective is around where the market is moving towards. So we'll hear from him a little later. And then following that, I'll talk to you about how we play into that opportunity, what our plans are into the future over the next quarter and 6 months across the three, across CMG, but the sort of separate streams that we've got, the upstream, midstream and downstream part of the business that I'll talk to you about. On screen, you'll see a presentation, which I'll use some slides, but the very first one I'll move towards is our strategy. Just to refresh, Critical Mineral Group has a vanadium resource in Juliet Creek, but we are so much more now than just a junior developer of a vanadium resource and developing that to make a product. We are and have a strategy around establishing a full vanadium supply chain that really takes the product out of the ground, makes an active material, and puts that into a end product being a vanadium flow battery. That is a battery very suited, its characteristics are suited for the vanadium, for long duration storage. And we'll hear from Patrick a little later as to how policy is really moving to need long duration storage in our energy transition. One of the unique features, and you would have heard us speak about our market to mine strategy. And let me talk a little bit more about that. The market to mine strategy recognises the fact that the market for VFBs in Australia is not that deep. In parts of Asia and Europe and America, it's a hell of a lot more progressed. It's far more developed, and major suppliers of VFBs, electrolyte, exist in Asia, Europe, and the US. So what we're doing in Australia is really developing that supply chain in Australia. So we're focusing on the downstream part of the business, which is the establishment of what we call best solutions. So battery energy storage solution business, and that's about finding opportunities in the market where the VFBs are suitable, talking to clients and customers around the addition of a battery solution into either a new opportunity, a new industrial estate, data center, solar sort of augmentation, or into an existing site which is similar to that, which a wind farm that needs a battery or a solar farm that needs a battery. So we are really focusing there to build that momentum, build that market, which will then incentivize the midstream and the upstream. And when I talk about midstream is the production of vanadium electrolyte, which is essentially dissolving pentoxide in acid solution to make the active material that is in the vanadium flow battery. And then once we get a momentum for vanadium electrolyte, that then in turn incentivizes the growth of vanadium pentoxide from the mine back in Linfield where we're developing. So the strategy is very much a pull strategy, pulling the growth And the reason why we've done that is to make sure that we're applying capital and investment at the right size at the right time to support the market. Instead of, as an example, investing all of the capital to build a mine without a market, we know and understand very clearly that to build and place capital in significant investments such as the electrolyte plant and the mine require offtake. And that's what we're trying to establish through really pushing the vanadium flow sort of BESS market. And to date, it's been, quite successful in really generating some momentum. So that's our strategy, and all of that is underpinned by, I suppose, really using technology expertise where we can, and an underlying theme of ESG in every part of that business, making sure we're the right governance, the right social impact and environmental, I suppose, approach to all of that. So that's our strategy. I'll move now into really the highlights over the last period, and I like to sort of separate the highlights into the three sections. So Linfield development I'll start with, which is the vanadium mine up in Julia Creek, is progressing exceptionally well. You would know we've been working on the pre-feasibility study. A lot of that pre-feasibility study is complete now. The last parts of that pre-feas are around the MET testing, and you might have seen in our report that we're progressing 2 lines of metallurgy testing around our flow sheet. We have a flow sheet which is focused around making pentoxide through an acid leach approach, and we have an alternate approach. And the reason why we've looked at an alternate approach is to look at the operating costs, to reduce operating costs and reduce the capital for production of pentoxide. So there's an alternate, which is an alkali approach, which is really showing some success. So we're progressing those two to make sure the pre-feasibility shows options that we've got to take into the bankable feasibility study. We've done an energy plan for the project. It will need to initially stand alone, and that's a study we did, and we used a flow battery and some renewable solar to support that with backup generators, gas generators. And it actually proved that a VFB introduced into that as a hybrid network was the best, cheapest capital solution, cheapest operating solution. So that is, again, an endorsement for vanadium batteries, which we'll have on site as an energy solution. So our activities around the pre-feas are report writing, doing the MET testing, and we see that being, I suppose, completed in the next quarter. It has taken a little longer, and that's because we've looked at an alternate route. And but the cash, I suppose, we're spending in the MET testing is well worthwhile to really bring the operating cost and capital down. The other part of Linfield is around approvals. We have done a number of studies, field studies. Again, we're using the team here in the office to write reports on the back of those studies to progress the EIS submission, which again should happen later in this year. So moving into the electrolyte plant, saw a fair bit of design and capital planning. The feed study, they call the initial feed study, is complete. The capital came in around that, and we're looking at a capital that came in higher than what we had expected, but not by much. So we're in a review phase now to ensure we are capitally efficient. There are some opportunities to upsize the vanadium electrolyte plant with some economies of scale. So we're just considering that, but it's certainly under review at the moment before we go into the full procurement phase, which will happen in the next 6 months. So that is progressing well. We've had a number of visitors out there, and we've got a lot more visitors that are sort of wanting to come and have a look at the site, even though there's nothing there. But we can show a three-dimensional, you would have seen on LinkedIn, a three-dimensional perspective of the plant design that we've finished there, and looks quite good. So the other part of that is around approvals. There's some minor approvals or secondary approvals we need to put that plant in there, and they're almost complete at the moment, working through the Logan Shire Council. The third part of the business, which is the battery energy solutions business, as I mentioned before, it's been a probably a primary focus for us in the last quarter, and that is really focused around establishing the supply chain participants that we need to, I suppose, have in train to help us deliver a solution for a customer. That's about making sure we know all the suppliers for not only the batteries, but for electrolyte, and knowing the suppliers for the balance of plant, some EPCs for the delivery and the civil works, electrical works when we look at install. Patrick Greene, who is going to be speaking later, has helped with some of the consulting of that, and that's been terrifically important for us to do the technical analysis. So that's going quite well. As well as the understanding the supply chain participants and forming those agreements with those parties. We actually took a trip to China and and looked at some of the key suppliers of VFBs, electrolyte over there, as well as pentoxide, which we may in the initial phase need. But the trip was a huge success. There is a huge market of installed vanadium flow batteries. The largest one I think we saw was around 400 megawatt hours, a massive battery, and there are batteries there that are 800 megawatt hours, so significantly sized batteries. The market is very deep over there. The supply chain is fully supported by a number of suppliers, and they're essentially supporting their market and the wider Asian region. The other part of what we've been doing in the best business is really trying to find a pipeline. So now we have a suite of projects we've put into our pipeline, and I'll talk about what we're doing with those in a short while. So it's been a busy period in the last quarter, and as I said, focused very heavily on the downstream part of the business to start to create that market, that momentum. But the other parts of the electrolyte and infill development have moved and progressed along as they have planned, with some more, as I said, met testing in the infill project. So that's a little bit about the past. I might hand over to our special guest now, Patrick, if you're there. What we want to give you as a perspective around the market, and as I said up front, it is a market that is ever changing. We use a number of industry reports. AEMO are probably one of the prominent ones of those that really give a quarterly report on update of energy mix, what they see as trends around the sort of infrastructure as well as policy. And we keep a very close eye on that. But I might hand to Patrick Greene, and welcome, Patrick. Thank you very much for coming online. If you can give some of your perspectives on the market, policy, and what you see the future being, that'd be terrific.
Thanks very much, Scott, and good morning, everyone. Scott said, my name's Patrick Greene. I'm a director at the Energy Project, and we've been working closely with CMG for the last several months, looking at building out the pipeline for their battery storage opportunity, but also keeping a really close eye on market developments. So really just a high-level summary of the key trends that we're seeing in the market. I thought would be useful to provide everyone today. Most people will be aware that the federal government's got a 2030 renewables target of 82%. That's locked in, and with the federal election out of the way, there's a degree of policy certainty around that we haven't seen for some time. So everyone in the market is really trucking along to get to reach that target. That target is underpinned by AEMO's integrated system plan, which sets out the requirement for a lot of new transmission. And what we've seen in the last 6 months or so is that that transmission build out, there's 10,000 kilometres of new transmission required to reach that target, is taking longer and costing more than the planners had anticipated. Anyone that's been looking at this market for long enough is probably not surprised by those two things, but the planners were, and so that's created more need for bulk energy generation and energy generation near to load centres. The other thing we've seen in the last 6 to 12 months is that wind development has really slowed, and that's a combination of it being more difficult to develop sites, to get them permitted and to get social license, but also higher wind prices, and that in turn has put more pressure on achieving that 82% target, just because there's a shortfall of that bulk energy that we need to generate in order to reach that. With wind, which is typically a lower price generator than the others out of the picture, or making a smaller part of that picture, we're expecting to see higher wholesale prices in the long term. And there's I guess that's a general theme. In terms of solar development, utility scale solar development is on track, but we'll need to accelerate to overcome that shortfall created by wind. And the shape of solar generation means that there's a greater opportunity for storage, and not only 2 to 4 hour storage, which is typically met by lithium ion, but longer duration storage, which could be met by hydro, could be met by VRFB. We've had several announcements in the last couple of months around coal exits. I think it's reasonable to assume that the last coal plant will exit the market in mid-decade, 2035. And the reliability and the maintenance of those existing coal plants, those remaining coal plants, is continuing to cause ongoing volatility in the wholesale market, and creating opportunities for storage. In terms of the battery storage market, we've seen a massive growth in battery energy storage systems and a growing pipeline of projects as well. So I think at last count there was nearly 17 gigawatts of battery projects in the pipeline, and 12.5 of them were expected to be operational by 2027. So end of next year. In the last couple of months, we've seen 2 enormous batteries come online. The Waratah Super Battery, which I think claims the second largest battery in the world. Waratah, that's 1,680 megawatt hours, and then Eraring, theirs is 2,800 megawatt hours. So some really big movement in the lithium ion space. The other thing we're seeing in terms of duration is that the lithium ion market is shifting from what was typically 2-hour batteries to 4-hour batteries, and I think later this year the average in the NEM will be somewhere around the 2.5-hour mark. But most of the newer projects we're seeing responding to that need to develop longer term storage. And that's really in response to larger and longer wholesale spreads and a weaker frequency control market. So that balancing market is starting to get saturated. The other thing, really interesting thing that we're seeing, and this is all of these themes kind of feed into each other, but the curtailment that we're seeing in solar and wind farms is growing, and in some regions is reaching in the order of 20 to 30%. And what that means is we build out a solar farm, we think it's going to produce 100 megawatt hours over a period, and we're only able to get 70 of those megawatt hours away. That creates a really unique and interesting opportunity for battery storage, but in particular vanadium flow batteries that are able to soak up that long duration storage, that bulk energy generation that would otherwise be curtailed, so otherwise just not generated, and shift that energy into a higher price period. The other thing that we're seeing quite a lot of is the co-location of solar and batteries that is growing. So for those solar and wind farms that are curtailed, or even ones that aren't, everyone is actively looking at how do I hybridize my generator and provide some storage capacity so that I can increase the capture rate and improve revenues from those sites. The other thing, I guess the other big elephant in the room is the growth of data centers. And so we've seen weak load growth over the last 10 or so years. Energy efficiency improvements had kept the lid on load growth. But we've seen a massive explosion in the number and size of data centers that are seeking connection to the grid. Some of these data centers are in the hundreds of megawatts of load individually, so they're starting to get transmission connected as well as distribution connected. And we haven't seen this so much in Australia, but certainly in the US, the pressure from data center operators to get connected quickly is meaning that they are looking for innovative ways to make that happen, and often that is co-locating with battery storage, or co-locating with a solar farm and battery storage. Or in extreme examples, there's a couple of instances of this happening in the US recently, literally just going off grid, building their own microgrid solution to get connected quickly. There's still some policy uncertainty, so there's many moving parts in the energy market. But the Nelson Review handed down its findings recently and was received generally very positively amongst the industry. The key takeaway there is that they didn't throw the baby out with the bathwater. They recognised that there was this tenor gap that was making it difficult for energy generation to get investment over the long term. So people were able to see what was happening in terms of pricing in the market over the sort of 2 to 3 year horizon, but beyond that, finding it quite difficult. And so they've made a number of recommendations to address that and have a liquid longer term contracts market, which I think will no doubt help CMG's cause. We've also seen the CIS auctions for capacity payments up and running from the federal government, which is I think represents something north of $70 billion of support. That's started to run last year and will finish around 2027, bringing 14 gigawatts of storage to the market. And we're seeing now all of the states come up with their different schemes. So there's the LTESA scheme, which is a cap and floor capacity support payment, which again supports long duration storage in New South Wales, and other states are following. So South Australia has released their firm mechanism. The Victorians have come out with something, and everyone else is starting to think about it. Scott, I think that's probably enough of a summary, except to say that all of those trends to me point to a significant load growth in the NEM over the medium to long term, and the need for a lot more battery storage, and battery storage that's got the ability to meet a sort of 6 to 10 hour load rather than a 2 hour load. I might just finish by saying that something we did last week, we participated in an EOI, and I've helped CMG lodge a response to an EOI run by a gentailer in Australia that was looking for a 10 hour storage battery. So again, very much in CMG's sweet spot, recognizing that there are not only in the national electricity market, but customers, load customers that are trying to figure out how do I build out an energy generation ecosystem at my site, at a complex site or precinct level that can meet a net zero target, and provide me enough generation and enough storage to meet loads of stakeholders and tenants. So I think that's a really exciting way to finish. Scott,
thanks, Patrick. No, thanks very much. That's really comprehensive and really just creates a picture of opportunity for us going forward. And you're right. I mean, just to build on that last EOI that we did submit, that is probably the first public auction type expression of interest that we've put in, but it's one of a number of submissions that we've been working on with customer clients directly in the private sector that are looking at interested sort of opportunities, which leads me on to the next part of what I'm going to talk about, what we're doing forward. I know we've got about 5-6 minutes to go, so bear with us on that. And again, thanks, Patrick. So what are our future plans? The focus will remain on all parts of the business, the upstream, midstream, and downstream. But just to elaborate on some, the best business is really getting some traction. The expression of interest is one, but we have a number of other anywhere from 5 megawatts up to 60 megawatt opportunities that we're looking at, and those batteries are anywhere from 6 to 12 hour duration. And we do a technical evaluation and a financial evaluation to look at those benefits of what you would have got if you've got a VFB in place and what you'll get going forward. So we have a full pipeline. There's plenty of work, and it's quite exciting. I suppose the next part of that is we've looked at the commercial models for those. We would see each one of those battery projects, if they progressed into a design and then a construction phase, being a special SPV under it, being an asset in their own right, being delivered as a project under the best business, and each one of those being funded accordingly based on the metrics of that particular business. So SPV. Now, the commercial models that we put in there is we can deliver a battery solution to a customer on a margin basis, just a delivery margin for a service, just design, procure, and install. Or we can look at other models where we look at leasing either all of the battery or maybe just leasing the electrolyte. So we're working through those options at the moment as well. Patrick mentioned a lot of curtailment. Some of our opportunities that we're really focusing on are those solar farms where we've seen, they may have built their farm on the back of 1 or 2% curtailment planned, but they're now getting upwards of 25% curtailment. So their revenue profile is vastly different, and there's an opportunity there to take the energy that is being curtailed in the middle of the day, whether it's transmission or economic related, putting that in a battery and then delivering it over the nighttime period, and their sort of dollar per megawatt hour significantly increase, and you can deliver all of the energy that the solar farm has generated in the day. We have got a project with the Julia Creek Council, which was announced at a recent roundtable out there. That's pretty exciting. So Julia Creek, which is the home of where most of the vanadium in Queensland is. So that's something we're working on with the council at the moment, and also working with one of our potential investors on an international vanadium flow battery opportunity, and we're just defining the site characteristics at the moment. So there's some real projects that are coming through, and exciting for us to take through to the next phase. I suppose the other piece of work we've been doing in that space is looking at financiers, and that's all of Clean Energy Finance, NAIF, a National Reconstruction Fund, ARENA. Some of those are grant type funding, and some of those are debt, sort of long duration debt financiers. All very excited about investing in downstream battery projects, as well as the vanadium electrolyte project, as it would see its growth on the back of some of these battery projects. So that's pretty exciting, that when we get to that point of needing to invest and put money into these projects, then there's some confidence that those groups will participate. The electrolyte business, as I mentioned earlier, is progressing well. The capital review is almost done, and the next 6 months we'll see a procurement phase of the key items. That's the major piece of work in that space. It's got a pretty clear trajectory in that regard. And the Linfield vanadium project up north, really the effort there is going to be maintained around a few things: finalising the flow sheet, the alternate flow sheet, and firming that up so we can take the right one into the bankable, and looking at the services such as power, water, and the sort of housing accommodation aspects of the infrastructure, I suppose, required to deliver that project. We're quite comfortable with the mine planning and those aspects of the infrastructure development, but it's the water security. So working with the water to to secure an appropriate amount of water. We've got a power solution which works in with the pre-feas that'll now be written up in the pre-feas report, and accommodation is one that actually the Critical Mineral Office in Townsville is doing a broader sort of perspective, report on what that would look like from an accommodation in the sort of Julia Creek, Mount Isa and associated regions, how sort of housing or camp accommodation would fit into that arrangement. So we'll work off the back of that particular report to help our pre-feasibility study final report. The approvals, again, will continue. We do have some more studies to undertake. They'll happen in the next half, and then off the back of that, this team will finish the report writing into the EIS. So that's all progressing well. We do have both a state and a federal approval process to run through, and we're not far off lodging the EPBC referral as well. So that's all moving forward at the right pace. So they're the major activities that we are focusing on. As I said, heavy into the battery solutions to really build that market momentum. It's a really exciting space. We're finding a number of those suppliers, the international suppliers of vanadium flow batteries, are engaging us and other sort of companies, but really looking to penetrate because they see the opportunity in Australia to bring that flow battery technology into Australia. But the one common theme with all of those is they want a local partner that is producing the product that they can use, because there is no sense in reality to shipping water across the oceans. It's just not cost effective. So producing pentoxide and electrolyte in Australia for the Australian flow battery solution is the right thing. Initially for CMG, within the next 12 months, because we won't have pentoxide and we would have started the electrolyte production, all battery solutions will be third party. So we'll work with those third party battery suppliers to bring in a wet battery. Yes, the cost will be a little higher initially, but it'll be the start momentum of flow battery installations in Australia, which will then kickstart, a supply chain being established in Australia and Queensland. So, Stuart, I think that gives us a bit of a wrap up on the past, what we've been up to, the energy market, and what our plans are going forward. Got a few minutes if there's any questions that anyone has, but we're sort of right on our 10:30 timeline, so really appreciate everyone hanging around. But if you've got any questions, really open to answering those if you have.
No questions have come through yet, Scott, but if anyone does have any, just click that Q&A button at the top there and pop them through, or if you don't have time now, happy to answer any questions on email after the webinar.
Absolutely.
Nothing's come through. All right, we might wrap it up there. Thank you very much, everyone, for joining us today. Really appreciate your time. And as I said, feel free to reach out if you've got any further questions. Thanks, guys.
Thanks very much. Have a great day. Appreciate it.